I've spent the past few months building out a model that tracks over 55 different data points, everything from ETF flows and shadow liquidity to global debt and credit cycles, with the sole purpose of trying to predict one thing. When will we see macro conditions present that are favorable to a crypto alt season? Alt season isn't random, it's not magic, it's not chance, but it's simply a byproduct of ripe conditions for risk assets being present. These conditions existed in 2013, and we got an alt season. These conditions existed in 2017, and we got an alt season. These conditions existed in 2021, and we got an alt season. And these conditions haven't existed since 2021, which is why alts have been basically left for dead. But all of that is slowly starting to shift. Conditions for an alt season are aligning for the first time since 2021. In this video, I'll show you what my model is saying is the highest probability timing for when alt season will start, exactly what the ignition odds grid is signaling right now, and how I'm positioning my portfolio to prepare for the coming alt season. Because if you wait until alt season is obvious, it's consensus, all the sheep and their moms and everyone else in between is like, oh yeah, alt season is coming, and they're already loading up on alts, it's going to be too late. First off, you've probably heard everyone and their mom saying that this time in crypto, we're not going to get an alt season. We may have gotten one in 2013. We may have gotten one in 2017. We may have gotten one in 2021. But this time, things are different. We're not getting an alt season because now we have too many tokens, or now, things have shifted because of the ETFs, or, whatever stupid, dumb excuse that people like to give as to why this time will be different. And for one, that's literally what they say every time. They were saying this at the start of alt season in 2017. They were saying this at the start of alt season in 2021. Every time that Bitcoin goes on this just rampage and outperforms versus the rest of the crypto space, everyone assumes that the alts are dead because that's what the most recent short-term history has told them. And, most people have this short-term memory problem where whatever's happened most recently is absolute truth to them. Alt season is simply a byproduct of extreme underlying liquidity and credit conditions. There is absolutely nothing magical or mysterious about it. When you get a ton of liquidity pumped into the financial system and an abundant amount of cheap credit, risk assets go up every single time. And as risk assets go up and people start to perceive that everyone and their mom is getting hilariously rich while they're getting left behind, they get extreme FOMO. And no matter how many times they told themselves, I'm never going to touch crypto again, I'm never going to get into that, all that stuff's a scam, blah, 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 they break because they have a deep, unhinged fear of missing out. Nobody wants to be left behind, and nobody wants to feel like everyone else is getting rich while they're not getting rich. Basically, you can think of alt season as an out-of-control wildfire. And so far since 2021, alt season has been more of a heavily controlled campfire, with the surrounding forest being pretty soaked damp from, let's say, a monsoon that came through. So the forest is soaked, there's no chance of it catching fire, and there's absolutely no wind. There's no wind to pick up the fire and really get things going. Alt season only happens when the forest is bone dry and you have 70-mile-per-hour winds coming through that forest, whipping up the flames. Add those conditions in, and suddenly it's really easy for this, heavily controlled campfire to become a raging out-of-control wildfire. And you can think of liquidity as the fuel for this fire. So think of it as the bone dry forest around this controlled campfire. And credit would be like the amplifier of that fuel. So think of pouring gasoline on that fire, or in this example, it'd be the wind. If you're familiar with how fire interacts with oxygen, the more oxygen you put into a fire, the bigger and the hotter and the crazier it becomes. So when you have a forest fire and heavy winds blowing into that forest fire, it causes that forest fire to get 100x more out of control. And it gets really, really insane because that wind amplifies the fire. And risk appetite would basically be the willingness of market participants to expend their capital, their fuel, into that fire and engage in more risky, kind of more insane behavior by taking out, higher amounts of leverage using credit. The more bullish and foaming at the mouth greedy that the market becomes, the more of their money they're willing to pile into risk assets, and the more leverage they're willing to take out via credit card loans or a second mortgage on their house, etc. And in this example, it'd be kind of if you had millions of people who were actively trying to burn the forest down. So they're lighting trees on fire, they're pouring gasoline all over the place. They just want to burn the whole thing down. But given the ripe conditions, it's absolutely absurd to believe that you can't have an alt season. It's unhinged, stupid to think that, given a bone dry forest and, raging winds, that thing's not going to spark into an out of control wildfire. In the same way, when you have an abundant amount of liquidity pumping through the system, an abundant amount of cheap credit, it's absolutely absurd to believe that you're not going to have risk assets spiral out of control. That has been happening for literally hundreds and hundreds of years, going back throughout history. And I promise you, people have not somehow magically changed in the last 4 years. The sheep yearn for the casinos. And if you give them the right conditions for risk assets, a risk-on environment, they're going to show up at the casinos in droves, ready to gamble their life savings away on the stupidest alts you could possibly imagine. So the question isn't if we'll get another alt season, it's simply when will underlying conditions converge in the right way that we'll see the environment that's able to foster an alt season. And because I'm obsessed with patterns, the 4-year cycle, macro, and all these things, and because I have my entire net worth in the crypto markets, I wanted to know, when is the most likely period for these conditions to converge that we can possibly see another alt season like environment. And so I built out this model using over 55 different raw data points, everything from things like ETF flows to the RRP to global M2, shadow liquidity, credit spreads, banking stress, and a ton more. Basically, a lot of data, a lot of information to try to get a clear picture of where the global economy is, where things are going, where there's stress, how loose is credit, how abundant is liquidity, how likely is liquidity to grow, shrink, etc. And the core model spits out a result, and it's basically a snapshot or a picture of what market conditions look like today. And it acts sort of as a gauge of how close are we to those ripe conditions that we need for a crypto alt season. And right now, here's exactly what that model is saying. It's saying the fuel in the economy is strong. So Bitcoin and ETH ETFs are still pulling in a lot of money. Stablecoins are growing fast, which is more ammo for that's crypto specific. Same thing with the ETFs. Activity is picking up, meaning traders are using stables more and they're doing more things on chain, meaning there's tons of fuel to kind of keep the fire burning that's already going. There's a lot of wood already sitting in this controlled campfire, ready to keep burning. We don't have to really worry about that going out anytime soon. But the plumbing of the financial system, the way that liquidity gets kind of like pushed around this global financial system is currently clogged. The Fed has slowed down QT, but it's still doing QT, it's still tightening, which is shrinking the money in the system. The Treasury is currently hoarding cash from taxes and bond sales, and the net liquidity flow is negative, meaning money's not quite flowing into the markets the way you would want it to during alt season-like conditions. And lastly, it's saying that the overall macro picture is improving, but it hasn't quite flipped green yet. You have the global M2 money supply growing again. Credit growth is healthy. It's not crazy, but it is healthy. And currently, U.S. manufacturing is still weak. The ISM sitting below 50. Typically, this is a lagging indicator anyway, so that doesn't really mean a ton. But we're not quite in the zone. We're not quite in the alt season risk on appetite zone. By the way, I really want to drill home the point that at no point between 2021 and today has this framework flipped green. It has been at some points deeply, deeply red. It has been red and yellow, but it has not flipped green. It has not triggered an alt season like environment since 2021. And I really want to emphasize that the crypto specific fuel section has been growing massively, sort of like this dark horse brewing in the background, ready to get unleashed. We have seen a huge liquidity unlock from the traditional finance space, Wall Street, and even governments jumping into crypto, not just Bitcoin, but tokenization, stablecoins, etc. That has added so much fuel into that crypto specific category. This is something we've never had in past cycles. We didn't have this in 2021. We didn't have this in 2017. We didn't have this in 2013. And when we do see those alt season like conditions, this crypto specific fuel, these new faucets of liquidity pouring into the crypto ecosystem should massively amplify that outcome. Now, that's just my first model and my first framework. After I build out that model and it spits out its result, I take that and I put it into a second model. And this second model has a single purpose. It's meant to assign a probability or the highest likelihood timing for these alt season conditions to converge. And it does that by taking in this first model's data, but also taking in other data points like the 11 rings of power, which is like a policy model that looks at global policymakers and like what are their incentives, what are they currently doing. For example, globally, are central banks in the process of cutting rates or raising rates? Are these policymakers more likely to turn on the money printer, QE, or like various other forms of like sneaky QE? Or are they going to turn on the money vacuum and vacuum all the liquidity out of the system using QT? What are different regulations and policies going into place that might change, global debt dynamics and how debt's issued or how debt's bought? Government spending, TGA, and all these things kind of brought together to give a clear, comprehensive policy and everything on the policy front. And really everything originates from, those policy decisions. Risk-on bubble mania-like environments have existed well before crypto existed. I mean, I'm sure a lot of you guys are familiar with the dot-com bubble. It's just they used to be a lot less frequent. There used to be a lot more space in between these events happening. And basically the reason that these things have started accelerating, the reason we see these things happen more and more frequently, boils down to the absurd amount of global debt that the global financial system has built up. Everything runs on debt. Everyone is up to eyeballs on their debt. Every nation is up to eyeballs on their debt. And this debt constantly has to be refinanced. Basically, at this point, it's all a giant Ponzi because there's literally no way that we could pay back all of this debt. The only choice that we have is to inflate away the debt, basically to make money more and more worthless so that the astronomical amount of debt that we have isn't so astronomical in the future. It's the same reason that, a burger used to be a nickel and now burger's $8. It's not that a burger has suddenly become more valuable or like harder to make in the 21st century. It's literally the opposite. It's a lot easier to make a burger, source all those materials, etc. Today, it's that money has been devalued so substantially that it now just takes a lot more money to buy the same things. I showed this chart last week, but the only choice that policymakers have is to inflate away the debt and do various forms of financial repression, like make banks buy more debt via things like the SLR exemption that we've talked about in the past. And when you inflate away the debt, that makes the value of your dollars and wages go down and the value of your assets go up. And just like any Ponzi, at the later stages of the Ponzi, as things get a little bit wobbly, things tend to accelerate and go a lot faster. And anytime the Ponzi looks like it's sprung a leak and is starting to break, the only choice that policymakers have is pumping the system full of liquidity to patch things up. Think of it like that like green ooze. Like if you ever have like a bike tire pop, you have that green ooze you put in your bike tire and you like pump it in there to like seal the holes. That's basically what global liquidity is for the financial system. And early in the life cycle of a Ponzi, things were more or less good most of the time. And there's only a few times you'd have this whole pop, and so you had to pump some liquidity into the system. And then you get the dot-com bubble and things go crazy, but then things calm back down. But these days, things are breaking all the time. The system has a lot of cracks in it, and so they're constantly having to inject liquidity into the system to fix things that keep breaking. And if you remember during my last update around a month ago, these were the odds of Altseason. So the highest probability was November through January 2026. That had a 42% chance. August or October had a 30% chance. February through April had a 16% chance. And then it kind of went down from there. But since then, things have changed quite a bit. Currently, the model says the highest likelihood for us to see Altseason would be October through December 2025, which sits at around 34%, with January through March 2026 sitting close at around 31%. And the trend has been, as more time goes on, as we get more data and more information, spring 2026 odds of us seeing those underlying conditions keep going higher and higher. And this lines up with a lot of the policy changes that I'm seeing. If some of you guys remember, I've talked a lot about Scott Bessen's three-legged stool that he always references, and it's trade, taxes, and deregulation. Those are the three levers that Scott Bessent and the Trump administration is pulling on to radically transform the United States. And we just had a court come in and block Trump's tariff orders, which absolutely nukes the trade leg of that stool. We're not quite sure how that's gonna, ultimately turn out. But with trade potentially going out the window and with Elon stepping away from Doge, we have seen a lot of the tone and the messaging shift that we're seeing from Scott Bessent. Now, when he goes on talk shows, podcasts, etc., he says one thing. When people say, "How are we gonna get out of this debt? How are we gonna, escape this? Now that we aren't gonna have all these cuts from Doge and we're not gonna have, potentially all this revenue from tariffs," he says over and over, we're going to grow our way out. That is their policy responses. We're going to grow our way out, which leaves the other two legs of the stool, which is deregulation and taxes. And we already have the tax cuts coming in the big, beautiful bill. And if trade is actually taken off the table, that really leaves one core area to focus on, and that's massive amounts of deregulation. That means things like the SLR exemption that we've talked about. That means credit abundance. That means financial loosening of conditions. That means the economy going into overdrive. Basically, the only way to make a fire bigger is to pour some gasoline on it. By the way, if you're interested in seeing more consistent updates on things like the 11 rings, my ignition odds, probability grid, as well as things like see my entire portfolio every time I buy and sell something, I share all of that in the Obsidian Council. It's currently closed to new members, but I'm opening it back up on Monday, June 2nd at 11 a.m. Eastern Time. You can sign up for the waitlist in the description of this video, and you'll get an email at that time to sign up. I'm only letting in the first 25 people who sign up, and after that, it'll be closed back down again. I say all that to emphasize that you cannot deregulate things overnight. Some of this policy decision and policy finagling is going to take a little bit of time to come into effect, to actually be put in place, which does seem to suggest conditions coming together a little bit later. Now, that doesn't mean between now and then we couldn't see an alt season. We couldn't see like an off-brand alt season where alts do well and things kind of go up and do okay. It's just you're not going to have those underlying conditions for that wildfire to really spread until these things all converge. And the way I'm currently positioning for it is that as of right now, highest likelihood, later in the year, we see Altseason kick off in, around October. It goes through December, and then we see it kind of spill over into spring of 2026 before everything collapses, and we go back into some form of crypto winter. As always, none of this is investment advice. I'm obviously not your financial advisor, and you should always do your own research. Make sure to hit that like button if this was helpful, and if you want to see more videos like this, including future updates, make sure to hit the subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.